When you start a business, one of the first questions you'll face is, should you operate as a sole proprietor or form an LLC, a limited liability company? For many new entrepreneurs, freelancers, and side hustlers, the decision feels overwhelming. After all, nobody wants to get lost in paperwork or legal jargon. But here's the thing. The choice between sole proprietorship and LLC doesn't just affect how official your business looks. It directly impacts your taxes, liability, profits, and long-term financial security. So, which one actually makes you more money? Let's break it down in simple, real-world terms so you can see exactly why wealthy entrepreneurs almost always lean toward LLCs, while beginners often stick with sole proprietorships. First, let's define the two. A sole proprietorship is the simplest business structure. It means you and your business are legally the same entity. You don't need to file special paperwork to set one up. If you start mowing lawns for money, freelancing as a designer, or selling products online without forming a company, congratulations, you're already a sole proprietor. It's easy, it's cheap, and you report your income and expenses on your personal tax return. An LLC, or limited liability company, on the other hand, is a legal entity separate from you. That means your business has its own identity. Forming an LLC usually requires registering with your state, paying a small fee, and filing annual paperwork. It sounds intimidating at first, but here's the catch. It gives you liability protection and tax flexibility that sole proprietorships don't. And those two differences can dramatically impact how much money you keep in your pocket. Let's start with liability. Imagine you're a freelance photographer running as a sole proprietor. One day, a client trips over your equipment and decides to sue you for medical costs. Because you're a sole proprietor, your personal assets, your car, your house, even your savings are on the line. You and your business are one and the same. If you lose the lawsuit, you could be financially ruined. Now imagine that same situation, but you're operating under an LLC. In that case, the lawsuit is directed at the company, not you personally. Your personal assets are protected, and the most you can lose is what's inside the business. That's why the wealthy almost never operate as sole proprietors. They have too much to lose. Even if an LLC costs a couple $100s to set up, it's a cheap insurance policy compared to the risk of losing everything. Now let's talk about taxes, because this is where the which makes more money question really starts to matter. As a sole proprietor, all your profits are considered personal income. That means you're paying income tax and self-employment tax on the entire amount. The self-employment tax alone is 15.3%, covering Social Security and Medicare. For someone making $80,000 a year in profits, that's over $12,000 just in self-employment taxes. An LLC, however, gives you options. By default, a single-member LLC is taxed the same way as a sole proprietorship. Profits pass through to your personal return, and you pay self-employment tax. But here's the trick. With an LLC, you can choose to be taxed as an S corporation. Why does that matter? Because it allows you to split your income into two parts: a reasonable salary and distributions. You pay self-employment tax only on the salary portion, not on the distributions. That alone can save thousands of dollars each year. For example, let's say your LLC makes $100,000. If you pay yourself a salary of $50,000 and take the other $50,000 as distributions, you only pay self-employment tax on the first $50,000. That saves you about $7,500 compared to being a sole proprietor, where you'd owe self-employment tax on the full $100,000. That's money you can reinvest into your business, put into retirement accounts, or just keep in your pocket. But that's not the only tax advantage. Operating as an LLC makes it easier to separate personal and business expenses, which opens the door to more legitimate tax deductions. You can deduct part of your home office, business travel, equipment, even health insurance premium. While sole proprietors technically can deduct many of the same things, they often blur the line between personal and business finances, which can lead to missed deductions or red flags during audits. An LLC forces you to keep things clean, which means you're more likely to maximize your write-offs. Now let's talk about credibility and growth. Sole proprietorships are fine if you're running a small side hustle, but they don't always look professional. Clients, banks, and investors tend to take you more seriously if you're operating under an LLC. Imagine you're bidding for a consulting contract. Who do you think looks more trustworthy? Jane Smith, sole proprietor, or Smith Consulting LLC? The latter sends a message that you're serious, stable, and professional. That credibility can translate into higher paying clients, better deals, and easier access to business loans. All of that adds up to more money in the long run. Another big difference comes down to scalability. As a sole proprietor, everything revolves around you. If you get sick, take time off, or want to sell your business one day, it's difficult because the business legally doesn't exist apart from you. With an LLC, you can bring in partners, sell membership interests, or even transfer ownership to your children. Wealthy people love LLCs for exactly this reason. It allows them to build businesses that last beyond themselves, creating generational wealth. Let's dig deeper into the costs. Sole proprietorships are essentially free to set up. You don't need to file anything unless you want a business license or a DBA name. LLCs, however, come with setup fees and sometimes annual renewal costs, depending on your state. This might be anywhere from $50 to $500 up front, plus yearly reporting fees. At first glance, that might make sole proprietorships look more profitable. After all, you're not paying fees. But when you weigh those costs against the tax savings, liability protection, and increased opportunities of an LLC, the math usually tilts in favor of the LLC once your business is earning serious money. Here's another key point: risk versus reward. Sole proprietorships might let you keep things simple when you're starting out, but simplicity can be expensive in the long run. If your business is small and makes only a few $1,000s a year, being a sole proprietor might be fine. But the moment your income grows, the risk of lawsuits, tax inefficiencies, and missed opportunities grows too. LLCs are built for growth. They give you a structure that can handle bigger deals, more revenue, and more complex tax strategies. That's why wealthy entrepreneurs almost never stay sole proprietors. They outgrow the structure quickly. So, which one makes you more money? The honest answer is, it depends on your situation. If you're just testing the waters with a side hustle and you're making less than $10,000 or $15,000 a year, a sole proprietorship might keep things simple. But once you start earning more, say $50,000, $75,000, or six figures, the tax savings, liability protection, and growth opportunities of an LLC almost always outweigh the costs. That's when forming an LLC doesn't just protect you, it makes you more money. Let's illustrate this with a quick scenario. Imagine two freelancers, Alex and Taylor. Both earn $100,000 a year from their consulting businesses. Alex operates as a sole proprietor, while Taylor forms an LLC and elects S-Corp taxation. Alex pays about $15,300 in self-employment taxes, plus income tax on the rest. Taylor pays herself a salary of $60,000, takes $40,000 in distributions, and ends up saving around $6,000 to $8,000 in taxes. Over 5 years, that's $30,000 to $40,000 in extra money, just from choosing the right structure. That's the difference between working harder for the same amount of money versus working smarter and keeping more of what you earn. And don't forget about peace of mind. For many business owners, the stress of knowing their personal assets are on the line can be paralyzing. An LLC gives you confidence to take bigger risks, launching new products, signing contracts, or hiring employees without fearing that one mistake could wipe you out personally. That confidence itself can make you more money because it pushes you to play bigger. At the end of the day, the wealthy aren't choosing LLCs because they enjoy paperwork. They're choosing them because LLCs give them control, protection, and financial leverage. Sole proprietorships may be easier in the short term, but LLCs are the path to building sustainable wealth. The real question isn't just which makes you more money now, but which structure sets you up to make more money in the long run? And for most serious entrepreneurs, the answer is clear: the LLC wins. If you enjoyed this video, hit that like button, subscribe, and ring the bell for more amazing videos. Thanks for watching. See you in the next video.